Assalamualaikum warahmatullahi wabarakatuh. Good morning, sir. First of all, I would like to introduce myself to all of you here. I'm Revi Sapira. My student ID is 1x10426425. I'm from class D. I take accounting English from Mr. Adi Mursalin. In this opportunity, I would like to answer the question given by my lecturer, Mr. Adi Mursalin. The question consists of three parts: A, which is related to the accounting theory and is practice; part B, which is related to video of accounting; and part C, which is related to accounting article. Well, I start to answer the question in part A. 1. What is accounting? Write the definition of accounting to 5 experts. Definition of American Institute of Certified Public Accountants. Accounting is the art of identifying, recording, deciphering, and summarizing in a significant manner, and in terms of many transactions in events which are in part at least of a financial character, and interpreting the result thereof. Definition of Warren Reef. Accounting is an information system that provides reports to stakeholders about the economy, activities, and condition of a business. Definition of Donald Kieso. Accounting may be best defined as identification, measurement, and communication of financial information about economic entities to interested persons. Definition of Arnold. Accounting is a system that provides information to anyone who must make decisions and control the implement of those decisions. Definition is an information system that recognizes and records financial transactions that are presented in financial statements. 2. What is accounting cycle? And explain in detail the cycle or the stretch of accounting cycle. What is accounting cycle? The accounting cycle is the holistic process of recording and processing all financial transactions of a company from when the transaction occurs to its representation of the financial statement to closing the accounts. Stage of accounting cycle. Transaction. Financial transactions start the process. If there are no financial transactions, there will be nothing to keep track of. Journal entries. With the transactions in place, the next step is to record those entries in the company journal in chronological order. 3. Posting to the general ledger. The journal entries are then posted to the general ledger where a summary of all transactions to individual accounts can be seen. Trial balance. At the end of the accounting period, which may be quarterly, monthly, or yearly depending on the company, a total balance is calculated for the accounts. 3. Mention the accounting equation and explain the component of accounting equation. Intention is accounting equation and explain the component of accounting equation. The basic accounting equation is also called the balance sheet equation. It's the relationship between asset, liabilities, and equity of the owner of a business. Basic accounting equation is the basic for bookkeeping in pairs. The basic equation component includes asset, liabilities, to add equity asset, a resource owned by the company and its economic benefit for the future. Liability is an obligation that must be repaid by the company from the consequence of past transaction. Equity is the residual value of asset owned by the company after deducting liabilities. 4. What is account and why are the use of account in accounting equation? An accounting is a record in the general ledger that is used to sort and store transactions. For example, companies will have a cash account in which to record every transaction that increases or decreases the company cash. Another account sales will collect all of the amounts from the sale of merchandise. Most accounting systems require that every transaction will affect two more accounts. For example, a cash sale will increases the cash account and will increases the sale account. 5. What is the purpose of accounting? The purpose of accounting is to accumulate and report on financial information about the performance, financial position, and cash flows of a business. This information is then used to raise discussion about how to manage the business or invest in it, or lend money to it. This information is accumulated in accounting record with accounting transactions which are recorded either through such standardized business transactions as customer invoicing or supplier invoice, or the more specialized transactions known as journal entries. 6. What are assets, liabilities, and owner equity? Assets are resources that are controlled by the company as a result of past events and where the future economic benefits are expected to be obtained by the company. Liabilities are certain corporate liabilities arising from past events. Their completion is expected to result in an outflow of company resources containing economic benefits. Owner equity is a residual right to a company asset after deducting all liabilities. 7. What is business transaction? A business transaction is an activity or event that can be measured in terms of money and which affect the financial position or operation of the business entity. 8. What are revenue, expense, and withdrawal? Revenue is the amount of money obtained or received by the company caused by an activity, generally the result of the sale of product or service. Expense payment are this time for future obligation in order to obtain same profits. Withdrawal is taking funds by the owner of an individual company for personal purpose that will reduce capital. 9. Explain the steps for analyzing the business transaction. 1. Determine the effect of a transaction on an asset, account, liability, owner equity, including income and account. 2. Determine the effect of the transaction on each account, whether the account has increased or decreases. 3. Determine whether the increases or decreases in the account must be recorded next to the credit or next to the debit. 10. Mention 6 business transactions happening in a company and their business transaction analysis. The owner, Mr. Andre, invested ADR in cash and Mr. Andre invested ADR 20 million rupiah in cash and in ADR 15 million rupiah. Cash increases ADR 20 million rupiah, equipment increases 15 million rupiah. For cash equipment, ADR 4,500,000 rupiah. 5. In case of the air, 2 million rupiah. Received of profit credit. Purchase equipment increases 4,500,000 rupiah. Cash decreases 2 million rupiah. Received decreases 2,500,000 rupiah. Completed consultant service of IDR 80 million rupiah. Received in cash for the remaining 3 million rupiah. In credit, cash increases 3 million rupiah. Received increases 5 million rupiah and income decreases 80 million rupiah. The owner withdrew IDR 1,500,000 in cash from the business for personal use. 5. Increases 1,500,000 cash decreases 1,500,000 payment amounting to IDR 3 million rupiah. Rent expense increases 3 million rupiah. Cash decreases 3 million rupiah. Part the following works expense 400,000. Miscellaneous expense cash decreases 500,000. 100,000. Wage expense increases 400,000. Miscellaneous expense 100,000. 11. Asset. Cash $1,000. Account receivable $3,200. Merchandise inventory $850 and $10,000. Accounts payable $1,515. 1. Cash increases $3,920. Income decreases $3,920. 2. Accounts payable increases $1,055. Cash decreases $1,055. 3. Cash increases $3,700. Sale capital decreases $3,700. 4. Rent expense increases $1,200. Cash decreases $1,200. 5. Accounts receivable increases $2,025. Income decreases $2,025. Store supplies increases $245. Cash decreases $245. 7. Cash increases $3,000. Income decreases $3,000. X. Account receivable increases $1,635. Income decreases $1,635. 9. Wage and sellers expense increases $850. Utility expense increases $325. Service expense increases $220. The operating expense increases $75. Cash decreases $1,500. 10. Supplies expense increases $865. Store supplies decreases $885. 11. 5. Increases $1,000. Cash decreases $1,000. Trial balance. Cash increases $7,683. Account receivable increases $6,860. Merchandise inventory increases $850. Store supplies increases $320 and increases $10,000. Income increases $10,588. Accounts payable increases $475. Sale capital increases $15,520. Rent expense decreases $1,200. Service expense decreases $250. Wage and salaries expense decreases $850. Utility expense decreases $325. Other operating expense decreases $75, 5 increases 1,000. Income statement. Net profit $7,888. Statement of change in capital. Final capital 31 of July $6,632. Balance. Activa $25,638. Passiva $7,107. Part B. In this part, the questions are related to the accounting video. I will answer the question based on the following instruction. Number 1. A. What is the title of the video? The title of the video is Chapter 1, Principle of Accounting. B. Who is the speaker in the video you watch? The speaker in the video I watch is Mark Christopherson. C. What does the video tell you? The video tells about principle of accounting. D. Explain the content in details of the video you watch. First, the purpose of accounting among other. 1. Identify, record, and communicate the economic event of an organization. 2. To interested use. 3. Activities in accounting. One of it is identification. First, we do identification. After that, we can enter the recording, classify, and summarize the prepare accounting report by communication with analysts and interpret for use. The accounting process includes the bookkeeping function. There are two broad groups: user of financial information, among other internal user and external user. And in internal user, there are management, human resource, finance, and marketing. In external user, there are RS, investor, labor unions, creditor, SEC, and customer. Ethics in financial reporting. Standard of conduct by which one's actions are judged or right or wrong, honest or dishonest, fair or not fair, are ethics. Recent financial scandals include Enron, WorldCom, Household, AIG, and AAG, and others. Congress visits Sarbanes-Oxley Act of 2002. Effective financial reporting depends on sound ethical behavior. There is a review question. Ethics are the standard of conduct by which one action are judged as A. Right or wrong, B. Honest or dishonest, C. Fair or not fair, D. All of the sufficient. The answer is D. All of the sufficient. Next, chapter 1 to 7. Various users need financial information. Financial statements, balance sheet, income statement, statement of the owner, equity, statement of cash flows, no. Disclosure. Generally accepted accounting principle, GAAP. The accounting profession has attempted to develop a set of standards that are generally accepted and universally practiced. Chapter 1 to 8. There are organizations involved in standard setting, which one is Securities and Exchange Commission, SEC. Cost principle, historical. This gets the company's record asset, other cost Monetary union assumptions included in the accounting records only transaction data that can be expressed in terms of many economic entity. Assumption requires the activities of the entity be kept separate and distinct from the activities of its owner and all other economic entities. Form of business ownership are proprietorship, partnership, and corporation. The basic accounting equation: asset equal liabilities to add owner equity. There are two variations on basic accounting equation among other. Asset minus liabilities equal owner equity. Allow asset minus owner equity equal liabilities. Using the basic accounting equation, transaction are a business economic event recorded by the accountant. May be external or internal. Not all activities represent transaction. Each transaction has a dual effect on the accounting equation. Company prepare for financial statement from the summarized accounting data, income statement, owner equity statement, balance sheet, statement of cash flow, and less of that duration and video the accounting career opportunity. Public accounting career in auditing and taxation speak the general public. Private accounting careers in an industry working in cost accounting, budgeting, accounting information system, and transaction. Opportunity in government careers with the IRS, the FBI, the SEC, and in public colleges and universities. Forensic accounting career with insurance companies and law office to conduct investigation into the and fraud. What are the benefits for you watching the video? The benefits for me are knowing the purpose, principle, and career opportunities in accounting. Number 3. What is the title of the video? The title of the video is How to Do a Balance Sheet. Who is the speaker in the video you watch? The speaker in the video I watch is Supervised CVA. C. What does the tell you? The video tell about balance sheet. D. Explain the content in detail of the video you watch. The video tell the balance sheet of a company 1 December 31, 2011. Part 1 of 4. Setting up your balance sheet. 1. Use the basic accounting equation to make a balance sheet. This is asset equal liabilities. There's to add owner equity. This a balance sheet has 3 sections: asset, which are the resource owners, liabilities, which are the company debts, and owner equity, which in contribution by shareholder and company earnings. The information needed to complete a balance sheet can be found of the company general ledger, where all financial transactions for a particular period will have been recorded. In a balance sheet, the total sum of assets must equal the sum of liabilities and owner equity. The asset account represent all the goods and resources the company owns. The liability portion represent all it is debts. The equity portion represent contribution by owner, shareholders, and past earnings. Theory Practically, all the assets of the company are either financed by borrowing, which is associated with the liability accounts, or are financed by past earnings and contributions from owners, which are associated with equity. To cost the debt for the balance sheet. The balance sheet is created to show the assets, liabilities, and equity of a company on specific day of the year. Usually, companies prepare an official balance sheet quarterly, the last day of March, June, September, and December, for example, and at the end of their fiscal year, such as December 31, but it can be done at any time. You might not finish putting together the balance sheet until several weeks after the end of the fiscal year, December 31, for example. But your data collection ended and balance sheet that would still be December 31. 3. Prepare the header of the balance sheet. Use the title balance sheet at the top of the fact. Beneath it lists the name of the organization and the effective date of the balance sheet, the last day of the quarter of fiscal year. Part 2 of 4. Preparing the asset section. 1. List all current assets. Current assets are assets that can turn into cash within 1 year of the balance sheet date. They are listed in order of relative liquidity. In other words, how easily they could be converted into cash. Common current asset account include cash, marketable securities such as stock, bond, account receivable, supplies, inventory, and prepaid expense such as prepaid insurance, prepaid rent, and include a subtotal of the current asset account and called a total current asset. 2. List all non-current assets also known as long-term assets. Non-current assets are defined as a company value of property, plant, and equipment that can be used for more than 1 year minus depreciation. The general ledger will indicate the current value of long-term assets. 3. Include any intangible assets that are also considered non-current. Intangible assets refer to non-monetary assets that have no physical substance and will last more than 1 year. They include patents, copyright, trademarks, and other rights. Non-tangible assets will have a value in the general ledger to establish costs. 4. Add up the current and non-current asset total and label this amount total asset. Here, check the total asset per your balance sheet are equal the total asset from the company general ledger. Investigate and resolve any difference you find. Part 3 of 4. Preparing the liability section. 1. Determine current liabilities. Current liabilities are liabilities that are due within a year of the balance sheet date. Common current liabilities account include accounts payable, short-term notes payable, and accrued liabilities include a subtotal of the current liabilities and title it total current liabilities. 2. Calculate long-time liabilities also. Known as fixed liabilities, these are any liabilities that will not be settled within 1 year. Long-term liabilities include long-term notes and mortgage bonds payable, and pension plan obligations include a subtotal of long-term liabilities and label this line total long-term liabilities. 3. Add the current liabilities subtotal to the long-term liabilities subtotal, label this line total liabilities. The balance sheet for total liability will be shown of the second part of your balance sheet and will be added to the owner equity. Part 4 or 4. Calculating owner equity in total. 1. Calculate retained earnings. Retained earnings are the amount of profit a company has earned for a particular time period. First, find the ending balance of retained earnings from the previous period. For on the annual report of the net income, revenue minus expense from your income statement, deduct dividends paid to investor and get the final total for current retained earnings. The statement of retained earnings will not be listed on your balance sheet but will help you calculate owner equity. 2. Calculate the owner equity. Equity consists of contributed capital, money invested, and retained earnings, historical sum of profit and losses. Here, make a list of all the equity accounts like common stock, treasury stock, and the retained earning number from step 1. And once all the equity accounts are listed, sum the and add the coefficient total owner equity. 3. Add the total liabilities and total owner equity figure. Total the sum total liabilities and owner equity. The balance sheet has been correctly prepared. It total asset and total liabilities and owner equity are equal. If this is the case, then your balance sheet is not complete. If balance sheet does not balance double, check your work. You might have omitted, duplicated, or miscategories of your accounts. Also, double check your retained earning balance, as this is a common problem area. Last, you have to sure that 2 of the total is balanced. What are the benefits for watching the video? The benefit for me is knowing that the balance sheet must be balanced. Number 2. What is the title of the video? The title of the video is Chapter 1. Review of accounting equation and how transactions affect the equation. B. Who is the speaker in the video you watch? The speaker in the video I watch is Mr. DeVries is SHS. C. What does the video tell you? The video tells the basic accounting equation. Review of accounting equation and transaction affect the equation. D. Explain the content in detail of the video you watch. First, the speaker cites the basic accounting equation. The accounting equation is considered to be the foundation of the double entry accounting system. The accounting equation shown on a company balance sheet where the total of all the company assets equal the sum of the company liability shareholder equity. The formula of the accounting equation is asset equal liabilities to add owner equity. How to calculate the accounting equation? The balance sheet holds the basic of the accounting equation. 1. Locate the company total asset on the balance sheet for the period. 2. Total liabilities which shall be a separate listing on the balance sheet. 3. Locate total shareholders equity and add the number to total liabilities. 4. Total assets will equal the sum of liabilities and total equity. The accounting equation have to assess whether the business transactions carried on by the company are being accurately reflected in its book and accounts. Below are examples of items listed on the balance sheet. Assets include cash and cash equivalent or liquid assets, which may include treasury bills and certificates of deposit. Accounts receivable are the amount of money owed the out to the company by its customer for the sale of its product and service. Inventory is also considered an asset. Liabilities are what a company typically owes or need to pay to keep the company running. Debt including long-term debt or liabilities as well as rent, taxes, utilities, salaries, and wages as well as dividends payable. Shareholders' equity. Shareholders' equity is a company total asset minus its total liabilities. Shareholder equity represents the amount of money that will be returned to shareholders if all of the assets were liquidated and all of the company that was paid off. Retained earnings are part of shareholders' equity and are equal to the percentage of net earnings that were not paid to shareholders as dividends. Think of retained earnings as savings signs in represent a cumulative total of profit that have been saved and stored as set of retained for future use. The video provides examples of transactions that affect the accounting equation. What are the benefits for you watching the video? The benefit for me is knowing what is accounting equation, knowing transaction affect the accounting equation, and also know how to calculate the accounting equation. Number 4. What is the title of the video? The title of the video is Financial Accounting Income Statement. B. Who is the speaker in the video you watch? The speaker in the video I watch is Matt Fisher. C. What does the video tell you? The video about income statement. D. Explain the content in detail of the video watch. Income statement is a company financial statement that indicates how the revenue is transformed into the net income. The income statement can be prepared in one of the methods. The single-step income statement takes a simple approach to telling revenues and subtracting expense to find the bottom line. The more complex multi-step income statement, as the name implies, takes several steps to find the bottom line, starting with the gross profit. It then calculates operating expense, and when deducted from the gross profit, yields income from operation. Adding to income from operation is the difference of other revenue and other expense. When combined with income from operation, this yields income before tax. The final step is to deduct taxes, which finally produce the next income for the period measured. In addition to the single and multi-step methods, the income statement can be reported on a cash or accrual basis. An income statement reported on a cash basis is typically used by small business that record transactions. Basis of the exchange of cash, the revenue and expense reported reflects cash received on sales and cash paid for expense for the accounting period. Major entities use the accrual basis, which is also the recommended method by the PASB. An income statement under accrual accounting reflects revenues earned where an exchange in value among the parties has taken place. Regardless of the whether cash we received and spent on the statement had been incurred, where the business has received a benefit and has paid for it or has recorded a liability to pay it a future debt. As we revenues, the exchange of cash does not dictate the amount reported for the expense. Income statements shall help investor and creditor determine the financial performance of the enterprise, predict future performance, and assess the capability of the business to generate future revenue stream. Drop the reporting the income and expense. E. What are the benefits for you watching the video? The benefit for me is I know how to calculate income statements. Number 4. Number 5. A. What is the title of the video? The title of the video is an introduction to accounting. B. Who is the speaker in the video you watch? The speaker in the video I watch is Kimberly Dunn. C. What does the video tell you? The video tells about an intuitive approach to accounting. D. Explain to content in detail of the video. This video you watch. First, an intuitive approach. What is accounting? Accounting is the language of business. Why the business need to communicate? Why does accounting exist? What kind of the question can accounting help people make? All different there are the types of accounting including tax accounting, management accounting, and financial accounting. The accounting most people think of taxes when they think of accountant. Tax accounting helps determine how much is owed to the government for taxes. Tax is a small part of accounting. Management accounting is designed to help people in business make decisions. Financial accounting designed to help people outside the business make decisions. Accounting brings it together in the language of business, including people and the process of capturing, summarizing, and reporting information about a business. Help people make decisions, including the main areas of the three types of accounting above. Why is accounting cool? People who understand accounting understand business and have tools to make better decisions and more information. E. What are the benefits for you watching the video? The benefit for me is knowing intuitive approach. Part C. 1. Why is accounting a great course to study? Accounting is a great course to study for a number of reasons. Accounting provides you with skill and knowledge that can be applied to a number of industries. In fact, so long as trade or business in the world, accountants will always be needed. 2. What do accountants do? There are many qualifications and jobs that deal with money, so how exactly do accounting differ from the type of finance-related roles? Perhaps the easiest way to describe it is that accounting involves dealing with real revenues, actual transactions, and observable finance. 3. Why is accountancy a good foundation? Even if you did want to branch off into finance and economics, a background in accountancy lays the valuable groundwork for developing broader monetary knowledge. Accountant can handicraft through the application of no methodology. 4. What must you have when you want to study accounting? When studying accounting, you will acquire knowledge about the law that govern business, typical business administration schemes, the ethics of accountancy, statistics, and accounting theory. You'll be taught how to prepare the key documents the your job will involve, including business profile, proposal, financial statement, and tax returns. 5. Is accounting right or wrong for you? Accounting could be right up your alley. However, if you like a role that is constantly shifting and requires more speculation, risk-taking, you may want to try other financial roles. 6. Are you sure the accounting will help you in the future? You can really go work with a diploma of accounting even if you decide to switch careers later. You'll have a great foundational understanding of how money is recorded and reported that will only help you in the long term. At the very least, you'll know how to manage your own finance better. 7. Why the accounting? Why does accounting have a good prospect of job in the future? Jobs in accounting are always in demand, and the skills you learn through studying are transferable and can be applied to many other disciplines. Thank you, sir.